Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, we've got a rate cut from the RBI today, 25 basis points, and that has, that has of course brought about a fresh lease of life in bulls. Given the fact that for the rest of the week we've seen the market being on the back foot, we've seen what really happened with the broader end of the markets as well. But today, there's been some cheer as a result of this rate cut. Of course, whether there's conviction, at these levels or not, we will touch base with our experts and ask them that. But for now, it's looking pretty okay. We are above that 26,100 mark. In fact, close to 26,200. 26,202. That was the swing high for the day. The Nifty Bank Index as well, they had come under some bit of profit taking in recent times. Good comeback there, 59,800 or thereabouts. We are around those levels. And the Nifty PSU Bank Index that saw some knee-jerk reaction to some clarifications from the government day before yesterday. Even yesterday they were on the back foot, but today we are seeing the Nifty PSU Bank Index being back to their form, and they are among the top sectoral gainers. In terms of the sectoral gainers this week, for the week, we have IT that's outperformed, up somewhere around 4% this week, of course, attributable to the weakness in the rupee. It did hit that 90 level this week, and right now, of course, the rupee is, it did see some strength, but once again, it's around that 90 mark today. But some steps that have been announced by the governor, we'll talk about that also in details. So yes, all in all, the policy did have an impact. Today, it was not really a run of the mill policy that had no market impact. We got a good rate cut. The policy was fairly balanced. That's what experts have said, and we are seeing the impact play out on the markets as well. Midcap index, although it is in the green, but the breadth of the market is still negative. So that does show some pain, and it will take some more gains or some more up move on the Nifty mid and small cap indices to actually get the broader market to participate. In terms of sectors that didn't do all that well were the likes of real estate, autos, FMCG. These were the top sectoral laggards for the week. Very quickly taking note of some of the gainers. NBFC stocks, of course, have been rallying today. The likes of Shriram Finance, Bajaj Twins. A lot of other names like Muthoot, etc. also up. But on the Nifty, you have Bajaj Twins, SBI from the financial lot that's doing well. Some auto names are doing well. L&T, M&M, these are some of the other names that are doing well, and Infosys and other IT names also among gainers. On the flip side, HUL trading ex ice cream business, that stock is down 5%. Interglobe, with what's happening, it's complete mayhem across the country. So many flights being cancelled, and of course the DGCA doing a U-turn on those MDTL rules as well. So lots happening on that front, and Interglobe on the back foot again. Eternal, Tata Motors, Trent, Sun Pharma, these are some of the other laggards. So net, of course, there are some news-based movers on the downside, but all in all, the texture of the market is looking fairly good today. But even then, for the week, we are looking at mild losses when it comes to the benchmark indices and the broader markets as well. To put into perspective what can take place from here, whether or not this up move that we are seeing in the market has conviction or does it lack conviction, let's bring on board big market voice Ajay Bagga to decode the setup here on. Ajay, lovely chatting with you this afternoon. We've got a rate cut, but the street was deeply divided. There was one section that believed that growth was strong, inflation low, but the currency movements were quite dire. So some of them said rate cut wasn't warranted at the current juncture. But the market, of course, is clearly very cheerful. On the back of this rate cut. What are your thoughts? Do you think it was warranted? And do you think there is room for one more in February?
Yeah, absolutely. I think it was warranted, Nandita. There was monetary space. In fact, the media interview 10 days back with the RBI governor, in that he clearly said that I have monetary space, but let's see how the data points come out by the time of the policy. Overall inflation is low, and this low and inflation is not a good sign. In fact, if you read between the lines, he did mention that gold is contributing 0.5% in the inflation print. So if you take that 0.5% of gold away, you are actually deflationary, because the CPI in October was 0.25. So when you are in deflation, it's a very big risk to the economy. Again, the 8.2 real growth is because of the GDP deflator being so low at zero point 0.5. In case there was an inflation, say, of 4%, how is the deflator made? It's 70% WPI, 30% CPI. WPI is zero, and CPI being about 1.29 for the quarter. They made a deflator of about zero point 0.5 in all. Now, if this deflator was 4%, your real growth would have been 4%. That is the thing. The nominal
Yeah.
growth has fallen to 8.7. Your budget maths, Nandita, they add up at 10%. So your fiscal is in trouble. You will make about 1 lakh to 1.5 lakh crores less of tax revenues at this nominal growth. That is what the RBI has seen. Secondly, the Taylor rule, which they use to see what is the real interest rate running, what is the inflation versus unemployment curve showing for the economy as a whole. That's clearly showing that your real interest rate is so high, 5.5 less 0.25, you are running at 5.25 to 5% real interest rate. It should be around 1.5, 2% at the max. So it's a big thing for the all the borrowers in the market to be paying such high real interest rates. That becomes a counter move, a de-stimulant, if you may, for the economy. So RBI has acted with pragmatism, with a lot of wisdom, I would say.
Okay, of course, fairly balanced policy given the fact that the challenges were quite a lot, not just the mixed signals but also the rupee weakness. But what about the liquidity measures that have been announced by the RBI? We have an OMO, we have a forex swap as well. Do you think all this is enough? Especially looking at the rupee depreciation, and also fact of the matter is that the durable liquidity would also slow down a bit in the second half. So all these
Yeah.
liquidity measures, do you think they cut ice?
Yep. See, overall, if you see, liquidity has gone down, so financial conditions are tighter, despite credit not growing as fast as it used to. Overall, the credit impulse is about 11%. So a lot of high frequency indicators, a lot of forward-looking indicators are pointing to a slowdown in the economy. It's not red hot as the 8.2% GDP real number is showing you. There are pockets of trouble in the economy. So that's why they have gone ahead and done this. Overall, what they have looked at is that this the rate cut will not have an impact on the rupee. The rupee issue is more because of FPI selling, FDI going negative because of foreign promoters, foreign PEs selling in block deals, OFSs, reducing their stake or offering in IPOs again as OFS. So that money going out is the biggest issue. If you look at under the hood, the debt segment has actually seen inflows. The equity segment, of course, has seen outflows for 2 years. The bigger issue is that add on to that the issues coming from US tariffs. Now, there we had thought that there would be at least some minor relief like Switzerland got or Brazil got. We've not seen that coming through. So that's been a disappointment. Rupee, to some extent, is getting hit on that as well. So RBI liquidity measures, good stuff. Again, Nandita, they don't need to wait for policies. So that liquidity management is I would say twice a week kind of a phenomena. They have lot of arrows up their sleeve to manage liquidity, both on surplus or on deficit. These 3 months coming up, the busy season, normally you go into deficit as money gets tight. And then government, what happens? Government will cut down on expenditure because they are going to lose 1.5 lakh crores of revenue which they had budgeted with this nominal GDP. They will you will see that going down. Even last quarter's GDP is a -2% on government expenditure. So normally February, March, you get money going very tight and RBI steps in. So you can expect more liquidity, but this OMO is a good announcement. The dollar rupee swap is a good announcement. Again, it's a signaling. $5 billion for our scale is neither here nor there, but it's signaling that I'm ready to step in. And speculators on the rupee dollar, watch out. Speculators trying on the interest yield curve, trying to make use of lack of liquidity. Watch out. I'll step in wherever on the yield curve I'm needed. That's the message that they've sent out.
Sure. All right. Okay. I got your point. But, let's talk about this rate cut from a stock market perspective as well. A good up move coming in now, but we had seen a fair bit of profit taking and caution seep in at record levels after hitting record highs. Do you think this leg of the up move that we are seeing because of the rate cut, does it lack conviction, or do you think we could see some more gains going forward? And secondly, how should you play this rate cut, given the fact that we've seen PSU banks doing well, private banks also, of course, the Nifty bank index recently hit a fresh record high. On the other hand, if you look at other rate sensitives, autos, of course, have got a fair bit of boost after GST cuts. But real estate is one pocket that hasn't really fired up. In fact, one of the major underperformers this year. So if you look at the entire rate sensitive basket, how should one go about building their portfolios in light of this rate cut?
Yeah, see what happens when the rate cut cycle starts. For the first quarter or so, normally the financials tend to underperform because why are you cutting rate? You're seeing some kind of trouble coming in the economy, some incipient recession. This time around, the rate cut was more to boost growth rather than to head off a recession. We are still growing at 8% or 7% in the first quarter. We weren't doing badly, but it was more to stimulate. Then they went into a pause mode because of Trump and tariffs. They said, okay, let's see how bad does it get? What happens worldwide? Will the tariffs have a very global impact and bring down global economies? Let's hold some powder dry. That has not turned out. Now, US Supreme Court could throw out Trump tariffs, or they could be much reduced than what was anticipated by the world. So now this rate cut is coming mid-cycle, or maybe towards say 75th percentile of the rate cutting cycle. It's not an early rate cut. What happens then? The markets tend to outperform. Markets, and there are two or three other tailwinds for the markets when they underperform for the 12, 14 months that we have seen, where we have underperformed versus EMs by 25%. What normally happens, the next 12 months are very good for the Indian markets. That's the historical data, 100% of the time. So you can expect some relief to come into the markets. Now, will FPI selling continue and hold back the markets? I think that's one issue. Second is the red hot primary market and the block deals. Whichever MNC, whichever promoter is finding valuations, they're just going and offering their shares in the market in block deals, and every supply is being met. But what that also means is less money is chasing the secondary market listings. So the existing stocks are not getting bid up. That is what's taking out a lot more liquidity from the equity markets. The primary IPOs, and now again, they're not cheap. We have seen valuations are high, but still everybody's playing IPOs like a lottery, that you get a listing and you get out on listing. That's what's being played. Even institutional players are happy with the 90 lockup period. But, that's late cycle. So I would say RBI positive, market liquidity, late cycle in terms of the primary markets, performance going ahead, rate sensitive should be well. Real estate, the issue was they really gave very good returns over the last 3 years. Then last 1 year, they underperformed. There's a catch-up trade happening. But you look at cement, you look at industrials, metals, all are doing well. So that's pointing towards that real estate will recover. But you have other ways to play it. Play it with the home finance companies, play it with the consumer-focused NBFC. All wholesale funded NBFCs which borrow wholesale, all their cost of funds have gone down today. They will be beneficiaries.
Yeah.
That's why today you see NBFCs doing well. So very logical, rate
Yeah.
sensitives will do well.
Rate sensitive doing well, and of course NBFCs, as you mentioned, they are all fired up today. All these M&M financials of the world and even Bajaj twins, they are all doing well. But last question, really, we have the next big cue coming in terms of the Fed decision, which comes out later next week, midweek or something. 25 basis points given the kind of weakness that the labor market is showing. Of course, there as well, the data is mixed, and plus we had that prolonged government shutdown, because of which a lot of data will be coming out today as well. 89% chance, last I saw that CME Fed Watch tool, it was showing 89% chance of a 25 basis point rate cut there. Is it a given? What were your thoughts?
I think it's a given, but unlike us, we had a unanimous rate cut today. So that's why our conviction is bolstered for February, one more rate cut to come through. It was unanimous. So all six voted. In the Fed voting, it will be a split decision, but because there are the hawks who are saying wait and watch, but there are the doves, especially New York Fed, Collins, once he changed the entire market trajectory 2 weeks back, 2 Fridays back, when he came in and said, no, I see a rate cut. Then Mary Daly of San Francisco followed up. Christoph Waller has his hat in the ring for the Fed chair position. The markets are warning Trump that don't bring in Kevin Hassett. So that's why the yields are not really cratering yet. But definitely looks like a rate. But it will be a close decision. Not a unanimous decision. You will probably see 9:7 or 9:8 kind of a split.
All right, got your point. Ajay, I have a long list of questions, but I'm afraid we are running out of time. That's always the case, But next time, of course, I will get you pretty soon.
Your programs are so good and the questions are so stimulating that one can just keep on talking. So thank you very much. It's a very rare occurrence.
Thanks a lot, Ajay. Thanks a lot.
Thank you.
No. But I will touch base again, and there's a long list of questions. But I'm sure we'll have a lot to talk about. We also have at least some trade representatives from the US coming in next week. Hopefully, some color on the trade deal should come in by the year end as well. So yes, lots to talk about. We'll get you back. Thanks a lot for joining in. All right, that was Ajay Bagga, Big Market Voice, with his thoughts on the market and the rate trajectory going forward. But let's take a look at the market. What's really happening now? Okay, we are near the high point of the day. 26,191, the 26,202, that's the swing high for the day. So we are once again trying to reclaim that level. Broader markets also kind of moving in tandem with benchmarks, but the breadth of the market is still negative. 2:3, that's the NSE advanced decline ratio. So yes, I mean, there's some bit of a lag there as well in the broader end of the markets. But look at the Nifty Bank Index, it's now around that 59,800 mark as well. Of course, banks, NBFCs, they're all fired up after the 25 basis point rate cut, doled out by the RBI, and of course, all those supporting liquidity statements also coming in as a big booster. Aside of that, if you look at some of the movers for the week, I want to just take you through some of the weekly movers as well. As I had mentioned at the start that, technology names, IT names are the biggest gainers. So Wipro, Tech Mahindra, HCL Tech, Infosys, TCS. These are the top 5 gainers for the week, and they have gained anywhere between 3 to 4% apiece, all thanks to the rupee weakness. Rupee, of course, we all know, hit a fresh record low of 90.4 to the dollar on Wednesday, and of course that's a tailwind for exporters including IT, and we've seen that play out in IT names as well. Aside of that, Asian Paints, that stock has been on an upward trajectory. A lot of brokerages also turning bullish. Upgrades coming through. The stock is up 3% for the week. Some of the life insurers have done well this week. Some of the metal names, some two-wheeler names have done. Maruti has done well for the week. But what's not done well? Interglobe Aviation. Lots happening here. Of course, there's been turbulence when it comes to flight schedules. Of course, operations have been disrupted. Thousands, in fact, 15 or 1300 flights have been cancelled in a matter of days. Yesterday itself, I think over 500 to 550 flights were cancelled, and in the last 48 hours, around 1300 flights have been cancelled. Mayhem, absolute mayhem at airports, flights getting cancelled. In fact, Delhi and Chennai had said that they were cancelling flights till about 4 p.m. and 6 p.m. today. But, if you look at some developments there, the DGCA, in fact, has eased the FDTL norms for airlines. They have withdrawn the rule that barred airlines from substituting weekly rest with leave. So, airlines can now use leave in place of weekly rest to stabilize the crew rosters. Now, these norms, of course, they have been, the DGCA has said that they will be effective immediately, and that's of course because of all the mayhem that's taken place, and so many passengers, thousands of passengers have been stranded, and that's happened across the country. So yes, late about turn by the DGCA, but that let's see how things, how much time things really take to normalize. But this is the big story of the hour, so to say. Lots of developments on this front, but lots of flights have been cancelled. So yes, that's about what's really happening with Indigo. But shifting focus to the market, let's bring on board our chartist for this afternoon, Nilesh Jain, Head VP Derivative and Technical Research at Centrum Broking, joining in. Nilesh, we'll talk about the markets, banks, etc. in a bit, but tell me, it's 326. Any BTST ideas?
Very good afternoon, Nandita. Absolutely. So we have seen a very strong momentum today in the market. So couple of buy recommendations. First of all, Policy Bazaar, PP Fintech, this particular counter has given a good momentum and a breakout on the chart. So we are likely to see a follow-up on the upside towards 1930 to 1950. So can be bought as a BTST trade, Policy Bazaar at current market price, keeping a stop loss below 1870, and on the upside target would be 1930 to 1950.
Okay, that's the recommendation coming in. BTST strategy from Nilesh. But Nilesh, tell me, we've seen a good up move in the market. Do you think this leg of the up move has some bit of conviction? Because right after we hit record highs, there seemed to be a lack of conviction, and we did give up those levels. But today's move, does it tell you decisively that we will be heading upwards from here?
Well, absolutely, Nandita. So we have seen a decent correction from the highs after hitting near about 26,300. We have seen some bit of profit taking. But good part of this pullback move is that, first of all, Nifty took its support of 21-day moving average, that is placed at 25,900, and it defended very well. And the second positive trigger is continuous fall in the India VIX volatility index. In this week, 10% sharp decline we have seen in the VIX, and that is giving another confidence to the bulls. It is currently at a very much comfortable levels of 10.35. Another positive development, we have seen fresh put writing at 26,000, 26,100 strike, and call writers have run for the cover. They have started covering the short position from 26,100, 26,200 strike. So given this kind of a positive development, we believe that Nifty is heading towards a new record high from here, 26,300 on a immediate basis, followed by 26,500. That's the December series target for the Nifty index, and the base has shifted at 26,100.
Okay, the base has shifted to 26,100, and we are making our way to a fresh record high as well. But for the week, we have completely flattened out thanks to today's up move. Otherwise, we could have clocked in some losses of 0.5% or 1% or so. But we have completely flattened out, and a little bit of a negative bias if you look at the weekly performance. What about NBFCs? What do you like? A lot of these names are quite upbeat after the policy.
Right, so we have seen a good momentum in the NBFC space as well, and within that space, if you see stocks like Shriram Finance, Bajaj Twins, and also Cholamandalam Finance, all these in fact stocks are looking positive. First of all, Shriram Finance looks like it is heading towards a new record high from here. 870 and 900 could be the potential target on the upside. One can keep a stop loss below 820, and buy and decline should be the strategy in Shriram Finance. If you look at Bajaj Finance, that's the another stock where we have seen a good momentum today. It has witnessed a good breakout from an inverse HNS pattern as well. So upside target would be somewhere around 1080 and 1100, keeping a stop loss below 1025. Bajaj Finance will be another stock that is looking strong on the chart, and also Bajaj Finserv as well. So these are the couple of stocks, and also Cholamandalam Finance. If you see this particular counter, we have seen a good momentum. In fact, it has been consolidating since a long time. Now, after today's move, it looks like it is heading towards a new record high from here towards 1780 to 1800, keeping a stop loss below 1680. Buy and decline should be the strategy in Chola Finance as well.
Okay, all these names looking good on the charts. Bajaj Twins, Chola Finance, and a whole lot of other names that Nilesh mentioned. But Nilesh, hold that thought. We'll come back. Just want to take stock of how the markets have shut shop finally. 26,180. A good 150 point up move on the index. Sensex up over 430 points. Midcap index also showing good gains of 0.5% or so. But the breadth, as I mentioned, is still skewed in favor of declines. Bank Nifty. 59,735, that's where it shut shop, a good 0.8% kind of an up move. The Nifty PSU Bank Index, last time I checked, that was the top sectoral gainer. Of course, we're coming off a corrective phase in the Nifty PSU Bank Index. Today it's up 1.5%. Remember, day before yesterday, the index had tumbled in excess of 3%. But it has done well to recover some lost ground. 1.5% gain on the Nifty PSU Bank Index. Entire financial services pocket was also up. That index was up almost 1%. IT, that's the big gainer this week. Thanks to the rupee weakness. Today as well, a 1% gain coming in on the IT pack. Banks, as I already mentioned, up quite a bit, almost 1%. Autos also gaining almost 0.7%. Metal also upbeat. On a week-to-date basis, IT, autos and metal, these were the top sectoral movers, with the IT pack logging in gains of almost 3.5%. PSU banks, realty, FMCG, these were among the top laggards for the week. In terms of the big movers, just want to take stock of which are the stocks that didn't do all that well today. HUL, Interglobe, Eternal, some of the other consumption names like Tata Motors passenger vehicles, Trent, these were among the laggards, but all these banking and NBFC names feature high on the gainers list for today. But one stock that I want to talk to you about is Keynes Tech. There's been some issues there. One brokerage yesterday flagged off some related party transaction concerns related to related party transactions. Of course, we saw a 6.5% cut yesterday. Today was no different. We saw another 6% cut today. Although the management did come and say that they are expecting the company to turn to positive cash flow pretty soon. I think by FY26 itself, end FY26 or something. But did little to really allay any kind of concern. The stock was down. I think it hit a lower circuit as well. They've said that the operating cash flow will be positive by FY26 end. But this move, the stock was already in a downtrend. Last 2 days moves, has there been a major breakdown on charts, and is it a complete avoid at the current juncture?
Well, Nandita, just to give you a disclaimer, we remain bearish on this particular counter since morning. We have given sell recommendation as well. In fact, if you look at EMS space as a whole, Dixon, Keynes, Amber, all these three stocks have given a breakdown. So structure-wise, all these three stocks are looking weak. Keynes specifically, today we have seen another breakdown. It is trading well below its all long-term, short-term moving averages. So there could be possibility of a follow-up on the lower side towards 4,200 to 4,000 as well. So it's kind of falling knife, not advisable to catch this particular fall. Better to stay away for the time being in terms of making any sort of a fresh entry. If somebody is already holding the long position, can keep a stop loss at 4,300. And if at all you get any pullback towards 46, 4,800, use that pullback to exit from the long position. The short to medium term structure looks weak.
Short to medium term structure looks weak. Drubbing the stock has seen in the last two sessions, and use any bounce to exit the stock. That's the call. But let's talk about Reliance Industries as well. It closed at the high point of the day at 1545 or so, very close to its 52-week highs of 1581. Of course, there's been a trigger as well. S&P has upgraded the credit rating to A minus from BBB plus, 2 notches above India's sovereign rating. Of course, the rating agency is pointing to increasing cash flows from non-cyclical businesses for its action. But what are the next levels that you'll be watching out for here? The stock has, in fact, done pretty well in the last month or so. Over the last 5 days, although it did see some bit of profit taking, but is it a buy on dip, or how would you approach it, and what are the next levels to watch out for on this counter?
Well, absolutely. It's a buy and dip structure. Counter recently witnessed profit taking from the high levels after testing highs about 1580. It has given a decent correction and retested the earlier breakout zone of 1520. And today it has formed a bullish engulfing candlestick pattern. That's again a bullish reversal pattern. So from here, we expect a follow-up move on the upside in the coming week. Maybe on the Monday, we say the levels of 1560 to 1580 as well. But the major structure still continues to remain bullish for 1600 plus positional target. Again, it's a buy and decline kind of structure, but from a trading perspective, if somebody is buying at current level, then keep a stop loss at 1515. That's the immediate support, followed by 1500. That's the next psychological support. So the overall setup looks positive, and since we are anticipating a new record high in the Nifty index in the very short-term time frame, so Reliance will be one stock to watch out for, which should participate in this rally.
Okay, that's the view. And just a disclaimer, we are part of the Network 18 is a part of Reliance Group. So if you make any investments in the stock, please consult your financial advisor as well. But let's talk about some of the big movers from the mid-cap end of the markets for the week. From the IT pack, Birla Soft, this stock is up 15, almost 14%. Of course, IT stocks as a basket has done well this week thanks to the rupee weakness. How are you looking at this leg of the up move on IT stocks, especially the mid-rung ones, the likes of Birla Soft, which have given double-digit gains in just a matter of 5 sessions?
Yes, of course. So on the overall IT space as a whole, we remain constructive given the kind of a rebound that we have seen recently. The setup looks strong from a short to medium term perspective as well as from a longer term perspective as well. These are the good levels to accumulate IT space. Specifically, mid cap and small cap IT stocks are looking better than the large cap. So Birla Soft is one of them. We have seen a very good breakout coming in on the weekly closing basis in this particular counter. So on the upside, the short to medium term target comes somewhere around 470 to 500, and immediate support is placed at 410. So keeping that as a stop loss, if at all you get any dip, that can be used as a buying opportunity. As mentioned, we are very much bullish on the IT space as a whole. Not only Birla Soft, Persistent System, Coforge, MTCs, and also LTIM as well. So these are the few names where we remain bullish.
Okay, that's the view on IT, and those were some of the names where Nilesh and Centrum are bullish. But let's talk about HUL as well. That was the big Nifty laggard today. Of course, it was trading ex ice cream business. Post this demerger, how would you be looking at the stock? FMCG has been on the back foot.
Right. So FMCG space, if you look at this particular sector as a whole, is not looking that promising as of now. There could be possibility of some bit of a pullback, but overall, we are witnessing a bit of consolidation in last 6 to 8 months. If you see, overall FMCG has gone through some bit of a consolidation and a range-bound activity that we have seen. So HUL, again, as mentioned, is not looking that great. There could be possibility that the stock may consolidate in the range of 25.20 and 22.20 on the lower side, which will act as an immediate support. So that's the broader range. I would suggest to stay away for the time being from the FMCG pack. We are not that convinced with the structure as of now.
Okay, stay away from the FMCG pack. One stock from the hospital diagnostic space, so to say, Vijaya Diagnostic. If I'm not mistaken, earlier this week I had seen the stock was doing pretty well. I think today it came under a fair bit of profit taking. Anything that you like from the hospital space right now?
As far as Vijaya is concerned, yesterday we did see a strong move on the upside, but today it looks like that move has got fizzled out. But if you look at in this particular space, be it Vijaya, Apollo Hospital, in fact, this space, healthcare space as a whole is not looking that great. And it's an avoid for the time being till the time we get any sort of a confirmation. But as of now, it is not looking that great. One particular stock from a laboratory space, that's Lotus Lab. So this particular counter is something that we are keeping an eye on and in our recommendation list as well. So Lotus Lab on the upside, it looks like it is heading towards a fresh record high from here towards the levels of 1050 to 1100. So these are the position target. Keeping 990 as a stop loss, any dip can be used as a buying opportunity, and the major structure looks positive.
Okay, Laurus Labs looking good on the charts. But since you're talking about recommendations, we already spoke about your BTSC strategies, and now you've said Laurus Labs also looking good. Any other stocks that one should keep on their radar for the next couple of weeks?
Right. So we also mentioned about NBFC space, Chola Finance, Shriram Finance. Both the stocks are in fact looking positive on the chart. So one should keep an eye on that NBFC space as well. So we remain bullish on this particular space. Apart from that, we also mentioned about Policy Bazaar. Given the kind of a breakout that we have seen today, the structure in Policy Bazaar looks strong, and that can be added not only from a short-term perspective as well as from a position perspective as well. This particular counter is looking attractive for 1950 and 2000. That's the positional target in this particular counter. And apart from that, today we have seen one particular cash counter where we have seen a very good momentum. That's Vintage Coffee. So Win Coffee, we have also covered in our technical recommendation as well with our client as far as the disclaimer is concerned. And we remain bullish on this particular counter for 175 target from a short-term perspective, and position target somewhere around 180. So keeping 163 as a stop loss, Vintage Coffee would be another stock that can be bought on decline.
Okay, Vintage Coffee. Okay, that's another stock that you could keep on your radar. But with that, Nilesh, would like to thank you for taking out time and joining in this afternoon. Always a pleasure. Look forward to our next chat as well.
Thank you, Nandita. Thank you for having me on your channel. Same to wish you a very good weekend.
Okay, yes, of course to you too. Been a long week. All of us looking forward to the weekend. But before that, let me bring on board my colleague Yatin Mota. Yatin, spirits are high going into weekend, given the fact that we've got what the street really wanted, a rate cut, and that has infused a fresh lease of life on bulls in the bulls, because when we came again close to the 26,200 mark. But broader end of the markets, although mid-cap index was up, I noticed that the breadth is still on the weaker side.
So I think we opened slightly on the weakish note, and that trend continued. Obviously, post the RBI governor's speech, the rate cut, the market gradually gained the momentum in the second half. We had the Nifty, which moved 150 points, 175 points higher intraday. And if you look at the mid-cap index, it was higher by 0.5%, but the small-cap index was down 0.5%. So probably the reason why the advance decline ratio still looked at 2:3. But clearly, I think with the RBI rate cut, revision of FY27 growth estimates, inflation probably being benign, I think once the growth is back, probably the mid caps would move. As of now, it's looking like I think the markets are entirely focusing on the large cap basket, especially autos, banks, real estate, the rate sensitive.
That's true, and NBFCs were quite upbeat today. Some of these stocks gaining in excess of 6% as well. But let's talk about the key takeaways from the RBI policy. Of course, we all know the headline, repo rate was cut by 25 basis points. Now the terminal rate stands at 5.25%. Now this cut has come after two pauses. The street was very divided. Strong growth, low inflation, and of course the rupee fall, the stupendous fall in rupee. It had crossed that 90 level as well earlier this week. But notwithstanding, the governor did oblige the market with a 25 basis point rate cut. Aside of that, 2 quarters of strong growth. So if you do the arithmetic, of course, we were anyway going to be above that 6.8% mark. So which is why they have revised their real GDP forecast higher to 7.3%. At the same time, inflation, of course, much within the comfort zone of the RBI. So they have brought it down to 2% from 2.6% for FY26. But the RBI does expect inflation to touch that 4% mark by Q2 of FY27. If you look at some of the other takeaways, the bond market was waiting for an OMO, and that was announced, and that to the quantum of 1 lakh crore rupees. So that's something that would boost durable liquidity, and the market was really waiting for that, because second half of the fiscal, the durable liquidity was expected to slow down. So yes, this has come as good news, and we saw the bond yields also easing by 2-3 basis points after that. Aside of that, for the currency market, the RBI governor announced a dollar rupee sell swap of $5 billion for 3 years, and this will happen in December itself. So that's also another announcement that the street took in its stride, and it was a positive announcement. But the economists I spoke to, they have said that largely the rupee move on the upside or appreciation would depend on improving capital flows, and of course any kind of update or any details on the trade deal. These are the two factors that would actually determine which way the rupee will head. This the dollar swap that has been dollar rupee swap that has been announced, that will take care of the dollar shortage in the forwards market. So that way it will be a temporary reprieve. But for the longer term rupee trajectory, longer to medium term rupee trajectory, a lot will depend on the US trade deal, and of course capital flows improving as well. So net economists and market experts I've spoken to have said that government has done a great job in doling out a balancing act. In the wake of conflicting data points and the sharp slide in rupee, what he has done is, he's calmly, cooled the markets as well, obliged them with a rate cut, and also addressed liquidity as well as the rupee fall in a way.
Right. Obviously, that's all about the RBI policy, 25 basis points rate cut, and obviously the projections for FY27 move higher by half a percentage point. So that is something on the positive side. But aviation.
Oh God,
Mumbai, Delhi, Bangalore,
Chennai,
Calcutta, wherever you go, you are witnessing chaos on the airports, and that is because the market leader, Interglobe Aviation, which is Indigo Airlines, has faced an outage. The kind of issues Interglobe has faced has brought turbulence, ticket prices soaring, and passengers stranded at airports. Not for 6 hours, not for 12 hours, for more than 24 hours. A lot of issues, and brokerages also have taken note, and that is the reason why Interglobe Aviation was yo-yoing in trade. Particularly if you talk about Citi, they have a buy on Interglobe Aviation with a target of 6,500. However, the kind of disruptions Indigo has seen, it is unexpected operational issues, as well as the kind of schedule adjustments which have impacted the flights, has resulted in chaos, and more than 100 departures and arrivals getting cancelled at various airports. Now, the management says that the recalibration steps over the next 48 hours will aid the normalization of operations, and flexibility in rostering and normalization could take some time. Obviously, during the day, post 2:30 p.m., we had the DGCA also changing the rules it tweaked regarding the night shift, as well as the rostering, which mandated pilots get adequate rest and have limited working hours in a week. Probably they have done some adjustment there, which will probably help the normalization take place at a much faster pace. I don't know when the situation normalizes. As of now, there is chaos on the airports. Still, normalcy is not returned to airport operations with Indigo. Hopefully, things will change. But the stock of Indigo, sulking in trade for last 2-3 trading sessions, today also was down 2.5%. Tried to recover intraday, but ended the day lower by nearly 1%.
Yeah, I think not a great time for a crisis like this, because this is year end and this is the time when people actually travel and go on holidays, etc. But the airline itself has announced full waiver on bookings, and they have booked like thousands of hotel rooms for stranded flyers as well. But we'll have to really see how the situation pans out. A lot of cancellations, and people getting stranded. Not a great situation to be in. At this time of the year in particular. Of course, Indigo with a 60-65% of market share, it anyway has monopoly, and of course such a big airline facing such an outage is like quite a big deal. But Yatin, what is the other stock that you have in focus? Canes,
so
I think.
Canes is there. That stock dipped 12% in trade. The stock is down more than 30% in the last 1 month or so. If you take into account today's fall as well, JP Morgan, which is overweight on the counter, their target is 7,700 odd. Now it is like, I think 7,500, 550. Now, the concerns which were raised by Kotak's annual report analysis report yesterday, it clearly states that there are concerns on balance sheet, cash flows, related party transactions, as well as the kind of interest cost capitalization and cost capitalization that the company has done. Obviously, the management gave out a detailed clarification to the media, but that didn't help. In fact, when the management was clarifying, the stock was down nearly 2-3%, And after that, if you look at the intraday chart, the stock was down 10% despite a good market. Now, JP Morgan believes that the investor feedback indicates that the company needs to demonstrate improvement in cash flows, execution on capex, and not only that, the stock has seen a downward trajectory since Q2 numbers. Q3 numbers are expected to be quite weak, and the investors are advised not to bottom fish according to JP Morgan, despite the fact that their target is much higher than the current market price. They are advising clients to wait and watch because it's a 12-month view that they have on the stock. So probably with the short-term aberration that we have seen, Q3 earnings pending, more clarity on the cash flow, which will probably come that time, is something that investors will watch out for. But as of now, even brokerages who are overweight are sounding slightly cautious and clearly not advising investors to bottom fish.
That's true. Even technical analysts, we had a technical analyst earlier in the show. I asked him, what should be done with the stock. Has there been a major breakdown on charts? They are like, we have been recommending sell since morning. And any bounce you get, exit the stock. That's the call on the stock. And of course, in a matter of 2 sessions, the stock has shed almost 20%. Today 12 and yesterday 18%. Well, that was all about the movers and shakers and newsmakers. Today, of course, it's a Friday. We're looking at a weekend. Thankfully, been a long week. When you have RBI policy on a Friday, it turns out to be a little longer. But next week, we have to shift focus to the Fed rate decision that's coming in on Wednesday night. Today, we have important data points coming in the US. Personal consumption expenditure data, that's the Fed gauge that's coming out. So that will be watched out for. And I think reports suggested that a US trade team will be traveling to India next week. So if that happens, let's see something comes out of that trade deal that we've all been waiting for. So, lots of cues to watch out for, but RBI policy brought about cheer to the market. We've managed to, pare down some of the losses for the week. We did end with a negative bias for the week, but today's 0.5% up move did help quite a lot. But on that note, I think we'll call it a day and a week as well. We'll see you next week again, Monday, back with the markets. But till then, have a great weekend, rest it out and come back fresh. Join us at 9 a.m. on opening bell on Monday morning and have a great weekend. Thanks a lot for watching.